Is Calgary's condo market going to crash? In the last couple of years, we've seen the Calgary condo market absolutely pop off, and this is in part due to the level of supply that we're experiencing in Calgary, and also with the rise of interest rates, putting a huge crunch on affordability for Canadians and Albertans.
It goes step by step, piece by piece, brick by brick, until it's complete. You gotta build it up, just build it up. You gotta build it up, just build it up.
Now this video is going to be broken up into 5 parts. And part 1, we're going to review the last 10 years of condo history in Calgary. The second part is we're going to be reviewing the history of net migration in Calgary for the last decade to see what kind of impact that is having on the supply levels in Calgary. Part 3, we're actually going to review the history of oil production in Alberta. Alberta's economy is heavily influenced on the production of crude oil, and we want to look at a graph to see what the last decade has looked like. Part 4, we're actually going to look at some key economic indicators set out by the Alberta government so we can review things at a macro level on how that is impacting our economy, and that's also relative to real estate. And part 5, I'm actually going to share my screen and show you guys what is happening in Calgary's inner city Beltline as it pertains to condos, so I can walk you through what things are being listed for, what they're selling for, and also generally how many condos are actually on the market right now, and can we even find one? So let's get into part 1 of the video, which is actually the history of the condo market in Calgary for the last decade. Now I'm gonna go through some real estate jargon here, and we're gonna put up some definitions so you can follow along if you might not know what some of these terms mean. So the first thing is obviously sales. How many sales have occurred? The year-over-year pricing, the new listings with year-over-year pricing, the S/NL, which is the sale to new listing ratio, the inventory, this is the amount of homes that are on the market at any given time, the year-over-year price change, the months of supply, which we'll put a definition up there for you, the days on market, so how many days is it taking on average to sell an apartment during this time period, the SP/LP, that's the sale price to list price ratio. If a home is listed for $300,000 and it sells for $300,000, that would be 100% sale price to list price ratio. The benchmark price, which we'll put a definition up here for you with the year-over-year change. The median price, which we'll also put a definition for you up here, again with that year-over-year change. The average price, and then the index overall. So if we look at this stat in 2015, we can see that the months of supply was 5.37. Now that is relatively high, meaning there is a lot of condos on the market in 2015. We don't have the graph going back as far as 2013 and 14, but at that period of time, the condo market was doing extremely well. Oil and gas prices were doing very well, and the Alberta economy was thriving. Afterwards, the real estate market started to take a tumble. As you can see with the apartment sector with 5 months of supply, that's a lot of inventory. The sale price to list price ratio was around 97%. Our benchmark price was around $287,000. Our median price was around $274,000. So it was a pretty soft market. And again, there was a lot of choice for buyers. If you guys look as we continue down over the years, that months of supply started to increase. In 2016, we had almost 7 months of supply, and that sale price to list price ratio started to decrease, meaning people were selling their condos at a discount. Scrolling down even further to 2017, we had 6.93 months of supply. Again, these are a lot of condos on the market, and that means it's taking 7 months to clear out all of our supply, and there is a ton of choice for buyers as it pertains to apartment condos. Scrolling down to 2018, 7.46 months of supply. Again, the inventory is rising and more apartments are getting put on the market. Again, we can see 96% sale price to list price ratio, meaning these homes are being sold at a discount. Continuing into 2019 with 7.14 months of supply. Again, we're seeing that price decrease. And another noteworthy thing to look at is if we look at our average price, we start at 309 in 2015, down to 307, 292, 292, and then in 2019, we're down to 275. Continuing to 2020, this is obviously during the pandemic, 7.95 months of supply. This is very heavy in favor of a buyer's market as it pertains to apartments, and that average price then dropped down to 252. So you can see that our condo market just declined since 2015 all the way up until 2020. Now here's where the glimmer happens and the hero is emerged. 2021, our supply starts to go down, 4.85 months of supply. Prices start to come back up to 266. 2022, inventory is cut in half, 2.38 months of supply, and our price goes up to 283,000. 2023, 1.54 months of supply, and our average price is up to 306,000. Now into 2024, as current standards, we're sitting at 1.4 months of supply, and our average price is now up to 337,000. So you can see that's a drastic change from 2015 up until 2024, and you can clearly see that we're on the rise with condos. So part two, we want to dive into the net migration numbers in Calgary for the last decade or so to show how many people are moving here and why this is having such an impact on our supply. You got to remember in 2015, we had 8 months of supply, and now in 2024, we're down to like 1.4. So what are some of the reasons this is happening? And net migration is definitely one of them. If you refer to the graph over here, if we look at net migration in 2015, it was an average of 18,160 people. You can see that this had a downward trend into 2019 and into 2020 and 2021. 2021, we were around 13.69 thousand. Obviously during the pandemic, not a lot of people were moving and things were kind of staying stationary. But then you can see this huge jump up in 2023, 56,310 people in 2023. But you can see that that huge spike in net migration has caused an influx of people to move to Alberta, and that is one of the biggest reasons why we're having such a crunch on our inventory. And condos tend to be the most affordable thing for people to purchase, especially first-time home buyers, people looking to enter the real estate market. And with net migrations jumping that much, a spike like that, that is why we're having such a great impact on our condo market. Now, part three, we want to go over the oil production in Alberta and see what kind of impact that has had not only on the Alberta economy, but also as that relates to the real estate market. Now, like I said in the beginning, Alberta is heavily reliant on oil production. This is one of our biggest economic growth factors. So let's take a look at the graph and see what our oil production has looked like for the past decade or so. So if we scroll over to the graph, you can see that 2011, 2012, we were doing pretty good. Total oil production of 11.5 million. And you can start to see this growth pattern into 2013 and 2014. During this time, the condo market was doing extremely well, and you can see that continue to rise with a few ups and downs up to 2015. In 2015, we obviously saw a decrease in oil production, and then we had a massive decrease in 2016, which definitely had an impact on our condo market and real estate market as a whole in 2016. We can see our oil production start to rise with a few ups and downs into 2018 and 2019. We again had a dip in 2020 due to COVID, and then we've been back on an upward trend into 21, 2022, 2023, almost up to production of 20 million at the end of 2023. Now, obviously this graph will be updated for 2024. As of this video, we're shooting this in February, so we will see that oil production likely continue to climb. Again, that is a good, healthy economic indicator that the Alberta economy is thriving and doing well. Again, we have net migration with more people moving here. Our supply is at an all-time low, and our oil production is on an upward trend. Now, part four, we're gonna jump into the Alberta Economic Dashboard, and these are from the Alberta government to show what key indicators are impacting our economy. So if I jump on my screen over here, the Alberta Economic Dashboard, your hub for Alberta's economic data and insights. Discover a wealth of vital economic information right at your fingertips. So let's take a look. So here's some recently updated indicators. Restaurant sales are up 12.4% year over year, up to 1.1 billion. Again, that is a good, healthy increase of over 10%. The consumer price index is up 3.4% year over year, which is also a good sign. Our tourism employment is up almost 5% year over year. Our air passengers are up 5.8% year over year. That's accounting Edmonton and Calgary. So again, we're positive upward trend on a lot of these key indicators. If we scroll down to the bottom, our GDP, which is our gross domestic product, is up 5.3%. Our investment annualized is up 14% to 63.6 billion. Our unemployment is up 0.2% year over year. So we've seen a slight increase in unemployment. It's not massive and super important, but it is up 0.2%. And the bottom portion, that net migration that we keep talking about, is up 22.4%. These are big numbers. A lot of people are moving here. Now, part 5 of this video, this is the part I've been waiting for. I'm super excited to show you guys live some of the sales history that's been happening. And particularly, we're gonna review apartments in the Beltline section of Calgary. This is that inner city core, very popular for people who wanna be close to the action in Calgary. So let's dive into the screen and let's see what's going on. So if you can look over here, this is what it looks like on a realtor dashboard. So on my price section over here, I've just put, I wanna see prices from 250 to 450. That's as far as the apartment condos. We're looking in the city of Calgary, and the subdivision is Beltline. Again, this is that inner city quadrant. If I show you guys what that looks like on the map here, this is that Beltline district that I'm referring to. It's right in the core of downtown, close to the Bow River, and close to all the action. If you look at these dots on my screen, the green is active. That means these properties are currently for sale. The purple is pending. That means that these sellers have accepted an offer to purchase on their condo, and the red means that they've sold. So let's dive in back to the criteria. If we look at just the active listings in the Beltline between 250 to 450, we have 41 results. That means we have 41 condos listed in our core. If we look at how many condos are pending in that same market sector, that means that these people have accepted an offer on their apartment between 250 and 450. There are 30. That means we have almost 30 pending sales relative to only 41 houses on the market. That's a pretty staggering figure. Similarly, if we look at the solds for the past 30 days, we've had 60 sales in the Beltline between 250 and 450 in the last 30 days. Now remember, I said there's only 41 active apartments on the market right now. If we add the sold and the pending, we have 90 total pending and solds in that little Beltline area relative to only 41 active listings. That is over a 2-to-1 ratio for how many condos are bought already, are under contract right now, and what is currently listed. We don't have enough condos to go around, and we are gobbling up this inventory. So let's look at some of these sales so we can maybe see what some of these condos are actually selling for. So if we scroll here, this one was on 15th Avenue. Looks like it was listed for $469, sold for $444. Took 78 days to sell that one. That's probably a bit of an anomaly. Started a little bit too high in terms of price. Here's another one in the Keynote 1. This is a great building downtown. They have a Sunterra Market attached to it, right by the Calgary Flames and the BMO Center, which is pretty nice. Sold over list price for $1,000 over. Another one in the Beltline sold for $435, listed for $460. Again, 72 days on market, so the seller likely priced their condo a little bit higher. Another one in the Beltline, listed for $429, sold for $430, 8 days on market. Another condo, listed for $430, sold for $430, full list price, 12 days on market. Another one on 13th Avenue, listed for $399. This one sold for $430,000, $30,000 above list price. And this was just on February 7th. We're shooting this video on February 20th. Another one sold for $420, listed for $469. You can see the CDOM, that's the cumulative days on market, was 219 days, meaning this seller likely priced this unit way too high, above market value. It did end up selling, obviously less than list price, but it was because it was priced so high to begin with. Another one listed for $440, sold for $420. So again, this one is 30 days on market. Priced a little bit too high. We're seeing a little bit of a discount on that one. Listed for $430, sold for $412. Listed for $425, sold for $410. Listed for $445, sold for $404. So we're seeing a few discounts in some of these higher 400 price points, But with the same token, the ones that are sitting for 30 days plus on market are tending to sell for a little bit less because they're overpriced. Let's jump in and look at some of the prices between 250 and 350. So in that 250 to 350 range, we'll take a look at the results here. Listed for 339, sold for 349, 8 days on market. Listed for 345, sold for 345, 12 days on market. Listed for 349, sold for 345, 12 days on market. Listed for 350, even after 100 days, it's still sold for 352. Or 342. Listed for 350, sold for 330, 53 days on market. Listed for 350, sold for 326. They were still able to get 326 even after almost 5 months on the market. So overall, you can see that there are a lot of factors at play, and in my opinion, the condo market is not going to crash. We have seen an 18.7% increase in apartments in the last 12 months, and that is the year-over-year data. Our net migration is at an all-time high. Our oil and gas prices continue to be on an upward trend. The key economic growth factors for Alberta are all showing net positive. So what that means for you, if you're a first-time home buyer, now is probably the time to get into the market so you can capitalize on this opportunity. If you're an investor, now is also a good time to capitalize on this opportunity because rents are also at an all-time high. If you're a seller that maybe had purchased a condo when the market was really high in 13 and 14, and you're finally looking to sell that pesky investment property that you're tired of managing, now could be the time to cash out because prices are stable and they're on an upward trend. If you need help navigating this real estate market, we would love to serve you. Don't forget to hit that subscribe button so we can keep producing awesome content. Click that bell so you can be notified when we release new content. And if you do want to get in touch with us, please connect with us using the link in the description below. My name is Riley Nichols with the Bricks Real Estate Group, and we'll see you on the next one.